Are you overwhelmed by paper receipts and scattered expense records? Properly organizing your receipts and records is essential to keep your business finances straight, maximize deductions, and avoid audit headaches. In this video, you'll learn practical, easy-to-follow steps to organize your business receipts and records without getting buried, using both traditional methods and helpful automation tools available in 2025. Let's start with why you should organize receipts. Keeping neat, categorized records makes tax time easier, speeds up bookkeeping, and protects you if the IRS ever audits your business. Step 1. Separate business from personal expenses. Always keep your business receipts, invoices, and financial records distinct from your personal expenses. Use dedicated business bank accounts and credit cards, and file personal receipts separately. Step 2. Choose your storage method. Physical receipts. Use labeled folders, envelopes, binders, or receipt boxes sorted by category and date, monthly or quarterly. Label each clearly, for example, office supplies, January 2025. Digital receipts. Scan paper receipts immediately using a smartphone scanner app or receipt scanner. Upload to well-structured folders on your computer or cloud storage, named consistently by date and category, for example, 2025-07_travel_expensify. Step 3. Categorize your receipts. Group receipts by key business expense categories: travel, meals, office supplies, equipment, client entertainment, etc. This simplifies accounting, provides clarity for tax deductions, and makes retrieval quick for audits or bookkeeping. Step 4. Set a regular filing routine. Schedule time daily or weekly to scan and file receipts promptly instead of letting piles accumulate. A consistent routine prevents backlog and saves stress at tax time. Step 5. Use automated receipt management tools. In 2025, many business owners use expense management software like Ramp, Expensify, Brex, or FreshBooks to automate receipt capture and organization. These tools use OCR, optical character recognition, to automatically digitize receipt information, vendor, date, total, categorize expenses, and sync with your accounting software, eliminating manual data entry and lost receipts. Just snap a photo or forward an emailed receipt, and the software handles the rest, keeping your records audit ready in one place. Step 6. Back up your records. Whether physical or digital, always keep backups. For digital files, use cloud storage combined with local backups. For paper receipts, keep copies scanned or photograph them before filing. Keep receipts and records for at least 3 to 7 years, per IRS guidelines, for tax and audit purposes. Bonus tips. Annotate receipts with notes about the business purpose when necessary, especially for meals and travel. Clearly mark any personal expenses mistakenly mixed in to avoid confusion. Train your team on your receipt submission process to ensure consistency. In summary, effective receipt and record organization hinges on separation, categorization, regular processing, and leveraging modern tools to automate tedious tasks. This keeps your business organized, compliant, and ready for tax time, without feeling buried. Have questions? Visit our website or email us directly. If you found this video helpful, or know someone who might, please like, comment, and share. Want the latest updates? Subscribe today and stay informed.